the infinite investing formula, or infinite banking, as it will. You can call it whatever you want, right? There's a great book floating around on infinite investing or the infinite banking formula. Now, I'm not a financial advisor, planner, or an insurance agent. It's a powerful tool if you stop the immediate trigger for yourself when people say life insurance. We are like life insurance, whatever. We know we need it. Fear-based selling and all that stuff. Here's the deal. There's different mindsets around this. There's scarcity and abundance mindset. There's using it as a tool or just looking at it for what it just is on the face. So some people say buy term and invest the difference, right? Term life insurance is absolutely much cheaper. But as you know, you're throwing that money away every single month, quarter, or year that you're buying in term. And you can't necessarily, who invests the difference in that? You can. We as in real estate investors, we know how. But let's talk about whole life policies for a second. There's a whole bunch of different types of these. And yes, they're more expensive than term. But the whole point of a whole life policy is that every single time you pay into it, you're building a cash value. So don't look at the insurance part. Don't look at the death benefit part. That's a piece of it. But the whole point of it is it's another way to accumulate wealth if you do it right and work with the right companies. So I did lots and lots and lots of research on this. I wanted a company where I could put my money in annually, and as I put my premiums in, let's say, I think for me, it started off at being just like $3,500 a year, right? So I would invest $3,500 a year, and immediately $3,200 of that $3,500 became available to me to take a loan out on it every single year. Here's where it gets really cool and interesting. Let's say 5 years have gone by, so I have roughly $15,000 I can take out. Or a lot of people do, what I do now is I have different life insurance products. So I have one specifically that I actually put in $25,000 a year into, okay? So that one has more money in it, so let's use that one as an example. Let's say I have a cash value of $50,000, I put in 2 years roughly. So I can take a loan from that account for $50,000. Automatically approved. It's my money. No one has to approve it. I just have to go into my online portal and I say I want $50,000 of my cash value. It gets processed and wired to my account. Now here's where it gets really cool. Every single year, one specific company is MassMutual. So MassMutual pays me a dividend every single year on that cash value. Roughly between 5 and 7%. It's been 6% pretty consistently, okay? 6% dividend. Now, that dividend is unrecognized on any loan proceeds. What that means is, if I take out $50,000, I still get that 6% on the $50,000, even though it's in my possession and I'm using it. Meanwhile, I am paying myself back interest on the $50,000. There's a processing fee, but all the interest that I pay back goes into my own account when I pay it back. So it's really cool where I'm getting the 6% by default on the money that I'm using actively for my own real estate investments. So let's say I can make 10, 12, 15, 20% return on a real estate investment. I'm making the 20% plus the 6% dividend that's on that money in the account that's sitting there. That's the beauty of an infinite banking formula. But here's the best part, right? You get to a certain point in the life insurance where you have enough money in there that it's actually generating enough in the dividends and paid up insurance to cover your whole premium. So you no longer have to pay in annually, but it's still, the cash value grows and grows and grows and grows, and you can still take out loans. And another piece is you do not have to pay these loans back. Now you have to be careful because you do have to keep your premiums up, right? So that the insurance doesn't go void on you. But there's a point where if you choose, you can take the loan out. Let's say you have $200,000 in cash value. You take a loan of $200,000 and you don't want to pay it back, but you can pay the interest on it. You can have that out indefinitely. There's no maturity date because it's your money. So that's absolutely a viable strategy. If anybody would like contacts that can help push you into these types of products, let me know. We have a great contact for you. His name is Greg. We use this as a very active wealth accumulation tool, and we absolutely do use this for real estate investing. Death benefit aside, doesn't matter. Now I'm set up, my family's all set up, but I wanted access to that money to use for solid investing strategies or for as a line of credit you can use. Hope that helps.